It's now been 3 months after starting this carry trade experiment, and September has been pretty stressful. There have been huge financing rate changes and big price swings, which have been both good and bad for my account. At the end of last month, my realized profit was £110.39, up around 10% since I started, but my overall balance, including open positions, was £141.63, and considering I started with a £100 balance, I was off to a really good start. This carry trade is quite different to my day trading strategy, and I plan to do a more detailed tutorial on how this works in a separate video, but I will give a quick summary of how it works here. Whenever I hold a position overnight, my broker charges me something called a financing fee. This fee is a percentage and it varies depending on what I'm trading, like a forex pair, index, or commodity, and I can see all of those fees on the broker's website. For example, if I'm long on the euro-pound cross, then I get charged a financing fee of 3.05%. This figure is annual, so I divide that by 365 to work out the daily percentage. And as you can see, most of these fees are negative, meaning that the broker is charging these fees. But there are some situations where the fee is actually positive, meaning the broker pays me that financing fee. So going back to the euro-pound example, if I was long, then I would get charged that fee. But if I was short, I would get paid a small fee. These are all really small though, so realistically, there's not much room for profit. But if I switch over to something else, specifically commodities, and I have a look at natural gas, you can see that holding it in the short direction pays a massive 96.8% financing. On the long side, most of these are negative, the exceptions being West Texas and Brent crude oil, which pay a small amount. They were quite a bit higher when I started this 3 months ago, but they've since dropped gradually to a much lower amount. And that's basically how this strategy works. I find instruments that pay me a financing fee, and then I go long or short depending on which direction they're paying. And like I said, I'll make a separate tutorial where I go into a lot more detail on how this actually works, so now's a good time to subscribe so that you get notified. Right now I have a long position on Brent crude and a number of short positions on natural gas. This is a very high risk strategy, and as you'll see later in this video, things can go wrong very quickly. So this isn't trading advice, it's just a summary of my own results. The first 2 weeks of September were pretty uneventful. The rates were steady, the daily payments kept trickling in, and the price of natural gas and Brent crude were in a range, so they weren't really changing too much. This was the ideal situation because I could just sit back and collect daily profits. This lasted up until September 14th. Brent crude at this point was paying 7.8%, but then the next day on the 15th, it dropped down to 5.8%. West Texas was still at 10.9%. So at this point I had to decide whether I should ditch my Brent crude position and switch it over to West Texas oil. I decided to wait a few days just in case West Texas was going to follow suit. And besides, the drop in Brent crude made almost no difference to my overall carry. Well, 2 days later, on September 17th, West Texas was cut by more than half and it dropped to 5.2%. So I'm glad I waited and I stuck with Brent crude, but to be honest, at this point, neither of the two was a very good choice. And this is one of the main risks with carry trades. The rate has dropped to a point where the profit from it is barely worth the risk that I'm taking. But since I was already in the position and I'd taken that risk, I decided to hold the position even though the rate was quite low. But there was an even bigger change to come. If we look at natural gas rates, at this point, the short position paid 34.5%. 2 days later, that changed to 96.8. My daily income had jumped from 32 pence up to 81 pence overnight. This was great news for my carry strategy, but because of this drop on my oil position, I wanted to diversify a little bit more. And I noticed that wheat was paying out a pretty consistent rate on the short direction. I checked the correlation first. There was very little correlation between wheat, natural gas, and oil, making it a great candidate for diversifying and spreading my risk out. I updated my spreadsheet with the rate for wheat, and I calculated how many units I would need to buy. Based on my risk level, I worked out that I would earn about 13 pence a day from this carry, which was a nice addition to my existing balance. But I also wanted to see the risk of this position. So I calculated how many pips it would have to move against me in order for me to lose 50% of that position. Once I worked that out, I switched over to the daily chart and I drew where that 50% risk line would be. All of this was happening on the 23rd of September, so it was somewhere around here. The distance from where the price was at that time up to this 50% risk line was pretty good, so it felt like a safe position, because what this basically meant was that price would have to rally all the way back up to this line for me to lose half of my wheat position. But then I switched over to the weekly chart and things looked a lot worse here. I noticed that my 50% line was hit a lot more frequently in the past, and in fact if I zoomed out further, I could see that wheat fluctuates massively in its price. The carry trade on this is in the short direction, and historically prices have easily gone up far higher than my 50% 50% position. So then I decided to half my risk again. This meant that my daily income would be far less. I would only be earning about 6.5 pence a day. This gave me a new risk line, which was this 25% level. Price would have a lot further to go to get back up there, so it seemed a lot more comfortable, but still, on the weekly zoomed out chart, that level was nothing for the overall price range. I decided the wheat fluctuates too much for the risk I was willing to take. In the end, I stuck with my positions on natural gas and Brent crude, and things continued going really well up until the last few days of the month. Here on a daily chart, you can see that starting with this candle here, natural gas moved into a really strong rally. 3 big green daily candles in a row. It then moved even further up against me today, but fortunately it looks like it's turned around a little bit. Hopefully that's the top and price comes back down, but there's no predicting it. And unfortunately, Brent crude, which is where I have my long-term long position here, has been doing the exact opposite. There's been 1, 2, 3, 4, 5 red daily candles in a row. My floating profit swung from being up almost £44 to being down minus £4 within a matter of days. My goal with this strategy is to collect a daily financing payment, so the floating profit and loss isn't really the focus, but if these positions continue moving against me, then not only will they wipe out my carry gains, they could potentially lead to a loss on the account. At the end of the month, I ran my rebalancing calculations as usual. I started with natural gas, and that showed that I needed to have 141 units. I currently have 135 spread across these 5 positions, so I need to add 6 more, but the spread today has been quite high, so I'm going to wait to see if that settles down before adding any more positions. The one upside of this rally is that it's actually increased the value of my position, and because financing is a percentage of my position size, it means that my daily payments from the carry have also gone up. I did the same thing for Brent crude, and this showed that I needed 7 units now. I only had 6, so I needed to add 1 more. It felt a bit uncomfortable adding to a losing position, but I guess the time to buy it is when it's cheap, so I bought 1 more unit of Brent crude earlier today. Unfortunately, it then continued to go against me, so I now have 2 positions, both in the red. My balance at the end of the month is £126.30, up from £110.39 at the start of the month and my rebalancing. That gives me a gain of 14.4% for September just from the daily financing. However, the price moves against me have meant that my equities dropped to £121.49, giving an unrealized profit of minus £4.81. I started all this with £100 though, so even though prices moved against me, I'm still up from my original investment. The biggest lesson from September is just how quickly the carry trade can change. WTI rates got halved overnight, but then natural gas more than doubled. I have no control over these rates, but they have a huge impact on my strategy's performance. September is the first month where things have gone against me and the strategy has been really put to the test. I'm going to continue with this and see how it plays out in October. If you want to follow this along, then subscribe and I'll see you in the next update.